right, traders, this is Blake Morrow, and you're listening to the Daily Roundup webinar. Hope everybody's having a great trading session. And wow, we have had a nice rally back in equities. You can see, the equity markets really have popped right back up to all-time highs. Very little follow through to the downside. No one really cares. Everybody's just brushing the coronavirus under the rug and saying, it's just a little virus, and the markets are shaking it off. The interesting thing, and I'm going to talk specifically about the FX market, is the dollar yen. If you were listening earlier today, you knew that I took some dollar yen shorts around the 109.07 level, and I'm sitting in them. Now, the fact of the matter is the dollar yen isn't rallying with equities, and this has been one of the bigger issues, overarching issues, that the market has seen in the last several months. I mean, you could actually go even further than that, but let me see if I can pull up a better chart here. Let me see, US dollar, Japanese yen. I'm going to pull up one that's not drawn on. Let me pull up the let's see, here, clean up all the drawings. Here's the dollar yen, and I'm really zooming out here, and I'm going to compare it to the SPX 500, and this will give you a better view of what I'm talking about. Okay, you can see really strong correlations in the S&P and the dollar yen for the most part. I mean, you can, over the last several years, you've seen some of the divergence here and there. This is one that is really glaring to me, and you can see since 2018. So we can look at from basically beginning of 2018, very tight correlation. Then about the end of last year, we really broke away. You could see the S&P moved higher, dollar yen failing to move higher. Now, we all know, and I'm going to talk in actually some length here about the S&P, or excuse me, the dollar yen up against really key triangle resistance. Everybody's pretty aware of that there's the dollar yen. We're up against triangle resistance. More or less, the market is anticipating a breakout of the dollar yen, because most market participants feel that the dollar yen is going to play catch up with the equity markets. However, the equity markets continue to blast higher. It's not dragging the dollar yen higher with it. Could you contribute it to the bid that we see, the underlying bid in gold, perhaps the bid that we're seeing in bonds and yields are weaker, specifically today? That might be a bit of an issue, but this has been more of an overarching issue of the dollar yen for quite some time, especially the last few months. You can see the last few months we've really peeled away, and you can go back in time, and I'll just I'll go back to, let's just here's a good example. I don't even know what dates we're looking at. This is 2008, 2011. Very strong correlations. You can see S&P moves up, dollar yen doesn't, and then we eventually see things kind of whip back into shape. S&P comes down, dollar yen comes back and down, and then correlations start to grab hold again. So if you're sitting here looking at the S&P versus the dollar yen, and you think this is going to happen, you're going to see this happen. Excuse me. You know what? Hey, I'm going to put you guys on hold for just 1 minute. 1 minute. Stand by. Don't go anywhere. Folks, give me 1 minute and I'll be wrapping up here in just a second. Sorry about the wait. I'm having an animal issue with my dogs. Excuse me 1 second. All right, sorry guys and gals, sorry about that. Like I said, I had to deal with a little bit of an issue here at the house. Benefits of working from home. When you work from the office, work from an office, that doesn't happen so much. Okay, so going back to the US dollar, Japanese yen, and the S&P, what I was talking about, you have this big rally in the S&P, dollar yen's not following. One of the reasons why I've actually decided to stay short, at least for the time being. But with the S&P moving to new highs, I might cut my short off here and just take some quick profits. But what I was saying before I was so rudely interrupted is if you're expecting these two, the S&P to come back and meet, or the dollar, something like this to happen, or, something like this to happen, and the S&P is going to play catch up in a big way to the dollar yen, that is not going to happen, in my opinion. What will happen is you will see, at some point the S&P will probably correct, dollar yen will correct, and then those correlations will start again. And but the risk to the dollar yen at this point is that it's not going up with equities. And so if equities do come off, you're going to see the dollar yen probably correct a little bit more aggressively than the S&P. And then the correlations will probably pick up once again. And then we've seen that historically, time and time again, over the last years and years and years of me following this correlation. You'll see those you'll see that happen quite a bit, and they'll be very strongly correlated. One will break away from the other. They'll correct. They'll readjust, and then they'll pick up those correlations again. Anyway, that's the dollar yen. I wanted to spend a little bit of time about that, just because. Let me get rid of this really quick. Just because that's what I'm currently seeing. Now let's take a real quick look at the euro. The euro's come off, and one of the reasons why the euro's come off is you have the U.S. Administration talking about auto tariffs for the EU, and how that's it is a real thing. And so the euro, which was getting a bid from the risk aversion, had slid because of that, and also with the recovery of the stock market back to all-time highs. The euro is going to fade as well. One of the correlations that no one is paying close attention to, and I think everybody is still stuck in the 2008 to 2010 rut of, oh, risk off, we're going to get some dollar strength. That's just not the case anymore. And the reason why that's not the case anymore is because we have the euro is a predominant funding currency. So what happens is when the market sees some sort of risk off, we get a bid in the euro, like you're seeing here. You're seeing a bid in the euro, and then once the U.S. stock market open, the euro came off. Obviously, there's other news that supported the move lower, and then you're seeing that sell-off. The only way the euro is going to catch any significant bid is if we do see stocks continue under pressure, which obviously is not going to be today as we hit all-time highs once again, which still I'm scratching my head at, and I'm sure a lot of you guys and gals are too. A couple other things I'd like to just share with you really quick is the Aussie dollar. The Aussie, you know, we're really at key support. This was my chart of the day yesterday. If you don't know where my chart of the day is, go to ForexAnalytix.com. You're on our website, go to where it says blog, and then from blog, you can get to the chart of the day, right? So you can see the chart of the day and you can read all of my analysis. I at least will put one chart up there Monday through Thursday. So, you know, we're at the neckline of a head and shoulder pattern. It is a risk for the Aussie. One of the things that I do want you guys to think about when you're talking about the Aussie dollar, though, is there is this broken trend line, which should also act as key support down here. So even if we get a break line of the, or a break of the neckline, there is a strong chance that we could pivot right off the 68, you know, 68.15 level. And then if that does stick, like let's say it does something like this, okay, then you create a false breakdown, reversal false breakdown, then, you know, the Aussie will catch a lot of people off guard, you know, being on the, people being on the short side, they might get caught wrong-footed down here. Now, obviously, the Australian dollar has a lot to worry about, you know, with the China-US trade deal, China taking away from Australia, buying more from other places in the world, including the US. You have Australia, it's going to be directly affected by this coronavirus if things start to worsen. You've got obviously the big fires in Australia. So there's a lot of reasons why the Aussie is weak, but that weakness could continue moving forward. But just watch these levels of support. Anything else that that I really wanted to cover today? I know I did talk about the S&P. We're also going to, one of the other things is the US dollar Mexican peso. Watch the dollar Mexican peso if you break back above 1843. That would be a risk of a false breakdown. All right, guys and gals, my name is Blake Morrow. You've been listening to the Daily Roundup webinar. I hope you guys have a great afternoon. We'll talk to you soon.